Alright, cool. This teaching is going to be, you could say, the first main one, yeah? Alright, cool. So what we're going to do today, I'm going to open your eyes to how the market actually moves, okay? So now you have to think here. Take a step back. First, think about how many traders actually make money in this game and how many traders lose in this game. Alright, so let's check a quick Google search. How many traders lose in Forex? 70, 80, and even more than 90% of Forex traders lose money and end up quitting. Remember that statistic, 90+%. Yeah? Think to yourself, why do that many people lose in the market? Why? Because they all trade the same way. What is the first thing that comes up on YouTube when you search for how to trade? Yeah? Now, if you have me on Snapchat, I released that quote unquote free course. The only education that will come up when you search how to trade is retail methods. Okay? Now, retail methods consist of support resistance, chart patterns, candlesticks. Everyone, everyone, the majority of traders, yeah, especially noobs, they pick up support and resistance and they think, I'm going to cream the market. Okay? So what they learn is, I'm going to find an area of resistance and an area of support, and I'm going to sell at every resistance and trade at every support. So they'll have this, yeah. They'll win a trade. Of course they'll win, yeah. But if you look into the future, what happens here? Now, people say that when the resistance is broken, that is called a breakout. Okay? When there is a breakout of resistance, people buy. There's an order in the market called a buy stop. A buy stop is an order you place above old highs. Now what the buy stop does is, if price goes above a certain area, I want to automatically get entered in a buy. Now people think that if price breaks the resistance, it's going to keep on going to the next resistance area. So they place the buy stop just above resistance. Now why is this important? I'm gonna introduce you to the idea of liquidity. Yeah, and now this term is thrown around pretty loosely. People don't really understand what liquidity is. They say it's what the money is in the market. In a nutshell, yeah, you can get with that. Essentially, what liquidity is, where the orders are in the market. Where's the buys? Where's the sells? Okay? Because think about it. Take a step back and let's apply some logic to the market. For there to be a market, there has to be buyers and sellers. Okay? Now, for there to be buying and selling at every price, there has to be buyers and sellers at every single price. Yeah? For example, you can't buy at 1.13 on the Euro USD if there's no one selling at that same price. Think about it. You go to a market, you want to buy apples, but no one's selling apples. Can you buy that apple? Nope. Same thing if you're trying to sell apples, but no one wants to buy the apples. Can you sell your apple? Nope. This is where liquidity comes into. Now I'm going to give you a gem, okay? When you see a tight range, this is called a consolidation. You think that this happens by chance? No, it's engineered by the market. We're going to go deep into that another time, don't worry. But these things are printed into the market for a reason. The job of a consolidation is to create sentiment in the market. When you see this, automatically there's confusion. Is it going up or is it going down? And that is what the market maker wants. That's what the large institutions want. Create uncertainty. Because what that does is there will be sellers above and buyers below. Remember, for you to sell, there has to be someone buying. Okay? This is a double top. Yeah? This is a double top. Above double top or above old highs, there's buy stops. Below old lows, especially equal lows, the more lows, or I should say, the more equal lows there are, the more liquidity there is. The more equal the highs and the lows are, the more liquidity there is. Why? Because every retail trader, the 90% that lose, is trading that. So for you to actually make money, my bad, you got to be in that 10%. So you have to trade against them. Okay, so now you got a double top, price comes, this candle, this candle goes above it, triggers all these buy stops, and at the same time, it hits people's stop losses. Yeah, a quote unquote stop hunt or stop raid, and then price quickly comes away. Let me just go full screen. Relatively equal highs. Yeah, price comes, it takes out here, comes down quickly, comes up clean, takes out this high, this high, this high, and it closes there. People get triggered in long positions. Now, people are buying here. There are buyers entering the market here. What can the large big boys do? Well, people are buying here. Let me sell it to them. They sell it off. Yeah, they sell it off. This is how the market moves. Yeah, it goes to an area of liquidity and it will deliver it to another area of liquidity. Yeah, okay. In saying that, look at this whole thing. Okay, this comes back into the range. So people would just, retail would just say, okay, this is the new support area. I mean, the new resistance. And this support still here. So it comes back down and it runs through price. Yeah, let's look at it properly. It runs through all these. Yeah, now people are thinking it's gonna go up. It's broken through the resistance. How many times do you go on trading chats, trading forums, social media? We have just broken this resistance. Price to go up to a certain level now. Yeah, the next area. Nope. It runs it aggressively and it comes down all the way back down and more. But let's add some logic to that. Okay, price goes all the way up, triggering all these buyers to enter the market. Now, when you want to sell, what do you need? Buyers. How many people are buying? For the big boys to sell. Yeah? For them to sell, they need to have people or buyers to sell to. So let's look at every single significant move that happens. Yeah? Cool. I want not to see a pattern. Support. Resistance, I mean. I don't even know the difference in why I traded retail in 3 years. Price goes above it. Actually, in this example, price goes and takes out the willing sellers first. Yeah, because under here, there's sell stops. Price stays here, it goes, takes out the buyers, and then there's a large move. Before every large move, you will see high or a low taken out. Backtest it for yourself. Yeah, let's look at more examples. Let's go. Boom, let's go here. Now, even this here is a stop run. Yeah, it's a liquidity hunt. Yeah, there's this high and there's this high. They're kind of the same. Price comes, this wick takes out these highs. Even if it's a pip or 5 pips, yeah, it's still taking out that high. I want you lot from now be give so much attention to highs and lows being taken out. Yeah, because that is where the liquidity is sitting. Liquidity above here, this candle takes it out, goes down. Now let's go to everyone's favorite pair, Bitcoin. This one was actually on my snap, I called it. People that have me on snap, they know that I called this live, but it's whatever. This high and this high equal. Yeah. Price comes down, it goes up, clears these equal highs. What does it do? It takes out the liquidity. All the market does is take buy side liquidity and then it delivers to sell side liquidity. So from here, high, high, they're equal. Price comes, removes them from the market, and it breaks down. This is buy side liquidity. In your notes, above old highs, there is buy side liquidity. Above old lows, there is sell side liquidity. Yeah? So you want to take buy side liquidity, which is here, and we've done that, and you want to deliver it to where? sell side liquidity. And where is sell side liquidity? Above old lows. Under every single low, there is liquidity. Your first target would have been this low, and this low. And what did price do? Delivered just that. Yeah. If you are bullish, what you want to do is wait for an old low to get taken out. All the time, wait for the old low to get violated. And you'll see a significant move to the upside. The vice versa applies to the sell side. If you're trying to get short, wait for an old high or equal highs to get violated and then come down. Now, you're going to ask, how do I know when it's going to be the stop run? Or how do I know? We can go over that in future teachings. Maybe leave it for the mentorship. Yeah. But what I'm doing to you guys is I'm opening your eyes to how the market actually operates. Do you think that this is a buying and selling? Do you think that, oh, there was big boys buying here and the price is going up? Or there's too many buyers down here. Support resistance, support resistance. Support resistance doesn't exist. Every single high and low in this market is predetermined. Everything is predetermined. Yeah? And we're gonna go over and I'll show you lot proof, or not concrete proof, but examples to how this market is completely rigged. Yeah? For now, all you need to know is you do not trade retail patterns. You don't fall in that 90% losing category. You don't do that. Yeah? Because you will lose. If you're trading like the majority, you will get slaughtered like the majority. You need to trade against them. When you see, like, another example is this one. Equal highs. Yeah? What happens? Price comes above it. It's not always one candle. You wanna see price trade above it. Now, in saying price trade above it, it could be one candle, it could be many candles. It just needs to trade above it. And now you see it trades above it and it breaks down even more. Yeah? Go into the market as a quote unquote homework. Okay? Find equal lows. Yeah? And see, or equal highs and lows. And see what happens when they get traded through. What happens next? Before every semi significant move, look if a high or a low got violated. So before every up move, look for the lows to be violated, which happened here. This big move, we took out this low, and this low. And we went up. This isn't just a big random move. Start to see with your eyes. We're traded below this low, and this low. Now, I'm gonna throw a little ICT mentorship in there. Is there any more lows to take out? Nope. There wasn't any more lows to take out, right? So what does the market do? It goes and attacks the buy side. Yeah. So it goes below here, and then this high. When price trades above this high, you start to target the buy side. Because if there's no more sell side targets, what do? You start to attack the buyers. Yeah? Now, ICT talks about a market structure shift. In a nutshell, when price makes the low, it goes, trades through all these lows. Yeah? So this low, this low, this low. And then it comes up and takes out the high before the low was made. That's your market structure shift. Yeah? And when you do the market structure shift, you look to the left. What highs are there to get taken out? This one, this one. This is a high. Now what does price do? Boom. Takes them up. Yeah? Look how there's liquidity below this low, this low, this low. There's liquidity everywhere. Liquidity is the blood for the market. The market can't operate without the liquidity. Without buyers and sellers at every single price, there is no market. Think about it. There has to be buyers and sellers at every single price for the market to move. If there's no one willing to buy at this price, then you can't you can't trade at that price, because who are you going to sell to? There's no one buying at that price. You can't sell it to yourself. Do you know what I'm saying? Yeah. So how can you use this? When you have your bias, yeah, when you have your bias, so you're bullish, yeah, let's say you're bullish Bitcoin, you want to look for the lows to get violated. Why? Because if you're a buyer, you're trying to deliver to the buy side liquidity. So, what are you trying to deliver to the buy side liquidity? Sell side liquidity. Okay, yeah. If you're not making notes, go back to zero, watch the whole thing, and make notes. Yeah. So you're buying, and you want to deliver to the buy side liquidity. But what do you need to deliver to the buy side liquidity? Sell side. Yeah. So, where is the sell side? I've said it a lot of times now. Sell side is below old lows. So when you're trying to get bullish, the best buying opportunities happened under old lows. The best selling opportunities happen above old highs. Yeah, the more equal the lows and highs, the greater chance price will take that out. It's a game for liquidity. Yeah, this is the first thing I want you lot to do. Remove retail. Remove the fact that I'm looking for support and resistance in the market. No, it's designed like that. Think about it. They want you to lose. Why is all the education support and resistance? Because you just want to be adding liquidity to the market. I don't want it to be liquidity in the market. They do. Yeah. The more bounces there are, yeah, the more liquidity builds up there. Think about it. Yeah, let's go back to USD. Remember, we said the consolidation earlier on the 4 hour. Like, look at this. The more clean the range is, the more orders pile up. Yeah. If you wanted to buy this, well, I wanted to sell this. I remember. Yeah. I was waiting for price to get above the highs, and then I wanted to sell. Now, how high does it get above the highs? That's a study in itself. I'm probably only teach that in mentorship. Like I can't just teach that. Yeah, sounds a bit like me being a dickhead, but I can't. A lot of people that I know, we knew it was gonna go here, yeah, and then it was gonna sell down. There's reasons why, yeah. But what I want you lot, the message I want to get across to you lot, retail methods, they don't work in the long run. Yeah, they lose in the long run because everyone trades them. You need to open your eyes to what the market actually is. Apply logic. I said this in every video. Apply some sort of logic to the marketplace. What is a market? Yeah? You know what? Let's Google. I know the economic definition, but I just want to do it for the video, yeah? A regular gathering of people for the purchase and sale of provisions, livestock, and other commodities. Yeah? All this is, forget looking at candlesticks, forget looking at high, low. It's a place for buyers and sellers. The market, yeah, and make a note of this. All the market does is take buyers and brings them to sellers. And it takes sellers and brings them to buyers. Now, that's to do with price delivery. Remember the voice note I sent you lot? Price delivery. You're delivering price. Because delivering sellers to buyers and buyers to sellers is price delivery in the market. Now, I've done a lot of talking. There's a lot in this video to take away from. The main takeaways is the market runs on liquidity. Yeah? It doesn't run off of quote unquote fundamentals. Yeah? It doesn't run off of support resistance. There's buyers holding the line. Do you really think there's buyers holding the line? Do you really believe that? No, it's not that. The market is engineered to take liquidity and deliver it to other areas of liquidity. The areas of liquidity above old highs, there's buy side liquidity in the form of buy stops. Under old lows, there is liquidity in the form of sell stops. Now, for you lot, find 3 examples there for your own study. I should do 2 each. Yeah? Before big up moves, yeah? Look at your eyes and see, is there a low taken up? When I mean a low taken up, I mean like even even this, yeah? Even even that is a low. Yeah? We can see that these highs got taken up before the big move. But even then, even at the top of it, yeah, when this move happened, there's a lot of buy stops above here because people want to get in the next rally up. Now, look at these, yeah? We want to look at the highs of this candle, H for high. The high in this one, 14816. The high of this one, 14829. 816, 829. This one's higher. Even though it's just a tiny bit higher, this high took out this high. Those people were entered long. The sellers then sold to all these willing buyers. Yeah, it sold all to all these willing buyers all the way to a sell side target. This low, this low. Yeah? Look, it got traded all the way through. Yeah? Now for Euro USD, the lows were targeted. Remember what I said. And look, there's no hindsight. So for Euro USD, I'm saying it on the live recording. This high got traded through. Yeah? The next high we're going to trade through. Look at this. Yeah? Live for the record. The high of this one, remember H. Yeah? The high is 4829. The high here, 4838. Yeah? What happens? Yeah? What happens when these highs are too equal? Let's see what happens. Yeah? What's this? A low. Yeah? Not every buy happens under old lows, but what I'm saying, the best quality buys happen under old lows. Now, I can go into talking about quality setups for another day. I'll be here forever. Yeah? Just a quick touch on it. The beauty about trading is in your power to take whatever setup you want. It's just your human nature, all that psychology, all that lack of education that results in you taking shit quality trades. Really and truly, if you are patient enough, you could only take the high quality setups. Why don't we? Think about it for yourself. Everyone has their own problem. Some people are impatient, want to make money quick. Some people just don't understand the market. Sometimes it's a mix of both. Yeah. Just to recap the entire thing, we don't want to fall in the majority. So you don't trade like the majority. Understand the concept of liquidity. Yeah. Let's just go on a random pair. You know what? Let me go on a random pair right now. Let's go on something crazy, like I don't know, NZD CAD. Yeah, let's go on NZD CAD. This was going down a lot. All right, cool. I can see it right now. High. This wick on a low time frame, they're equal highs. Yeah, because we're on a 4 hour. I'll show you what I mean. It's gone on 1 hour. They're pretty equal, right? What happens? Price comes down. As price comes down, as price makes all these highs, there's liquidity building at every high. Price goes up, down, up. It's cleared this liquidity already. Yeah. It's cleared this high, goes across, and then price goes up and clears these relative equal highs that it created when cleaning out this liquidity. And what happens? Big move down. Now pause. As price comes down, of course, it makes more highs in the consolidation. Remember, at the start I said, what does a consolidation do? You better made a note of it. I'm not going to repeat it again. Yeah. Making a high, 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 high. Making lows as well. Price comes, triggers all the buyers. Yeah, it's taking buy side liquidity, delivering to the sell side liquidity. Simple. This one, well, this is equal. And then you see later, this comes and takes out this. Yeah, this one goes down, comes up, collapses, comes down, price goes, takes out these buys, and it takes out anyone else that was here, and it goes down. Every single time, any pair, any market, it happens. It's all a game of taking liquidity and delivering it. This is the philosophy that I want you lot to now look at the market with. The market is a place of buyers and sellers. Therefore, the market is full of buy side and sell side liquidity. Yeah? In saying that, the market has to deliver buy side and sell side liquidity. Yeah? It has to take buy side and give it to the sell side. It has to bring sellers to buyers and buyers to sellers. Yeah? Now, using that, get in the mind every single time you trade now. If you're trying to buy, you're going to think that, I want to take the sell side to the buy side liquidity because I want to buy. I want to get to the buy side. But what do I need to take to the buy side? It's best if I take some sell side with me. Yeah? If you want to short it, you're trying to go to the sell side. So wait for the buy side to get tagged and then deliver to the sell side. I promise you, this is a free video. You will not find this quality of a video in any paid premium, let alone a free one. This one you rewatch many times, you understand it. If you're very new, watch it many times. Yeah? There's nothing else to say on the matter of this. Yeah? This is a teaching on how the market moves. It is a game of liquidity. When you trade now, be aware of the liquidity in the market. When you want to trade, think about the liquidity in the market. There's a saying, if you can't see the liquidity, you are the liquidity. And you don't want to be liquidity. It doesn't end good. Yeah? Let's go on indices. Does this work on indices? Well, of course it does. This is just, I actually called this, I have the before and after for this. If you lot want me to post it, I can post it. Just say that, can I have the before and after for NAS? I can post it. So what happens? Yeah? Okay. Of course, there's loads of highs here, highs here, highs here. Price comes, takes out all these highs, delivers to the sell side. Yeah, let's go on a 4 hour. This is a major resistance area. Major. Look how clean they are. How much buy side is there? Price comes above it. Now, you don't want to just trade when it's above it. You need some sort of confirmations, and I leave that to you. You find your own confirmations. I'll start giving you them as we progress. Yeah? But price stays here. Yeah? And boom, comes down to where? The lows. These equal lows. Yeah? I don't know if you guys can see it. The more equal the lows, the more liquidity. Yeah? Takes out buy side and delivers it to sell side. This is what I mean. You have to apply logic to the market. The more logical you are as a person, I promise, the better a trader you will be. This market, you have to have sound logic behind it. Think about it. You're taking buyers, bring them to the sellers. This isn't, oh, resistance got broken, we're going to the next level. It was a fake out. What an excuse. What an excuse to hide behind. Fake out. You're just liquidity. Simple as that. But yeah, guys, I want you lot now, yeah, look before any type of, you know, significant down move or up move or any breakout of a range. See, is there any high or low violated? Even if it's a tiny, minor violation of a high, it doesn't have to be trade way over it. Remember, I've shown you examples where it just barely trades through it, but that's still a violation. Yeah, it still triggers in those buyers and sellers and then delivers it to the opposing side. Yeah, but yeah, that's the first real teaching I'm giving you guys. Open your mind to the market. Ask me questions in the chat. I'm happy to answer it. Yeah. So make sure you do that homework. Two buys, two buy sides and sell sides. Look for two big moves to the upside. What happens before it? And two big moves to the sell side. And what happens before it? That's all for today. Yeah. So